Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody is doing well. So we're going to go through all the majors. It's Friday, and I have to say the equity markets are holding up really damn well. I mean, look at stocks. I mean, and since I'm here, I might as well just go with the S&P right now. I mean, this is a kind of a jacked up looking inverted head and shoulder pattern. But remember our discussions yesterday, right? The discussions about this, breakdown being a possible false breakdown. It was, and it is. And so, hold on. It was a false breakdown. Sorry, I had to just address something really quick. It might be a false breakdown, but we're going to be pushing right up against, and we wrote this down yesterday, resistance at being 44.20. You remember that, right? It held. I mean, before it got there, before it was even a remote thought in anybody's mind, we had written resistance at 44.20, then 44.50. So 44.20 is big, and it's going to be big again today, but I'm going to, we're going to expand on that 44.50 because I don't think the 44.50 is the right number. Okay. Now, the reason why I say that is we're on an hourly chart. So let's dig into this a little bit closer. Okay. And let's take this high to low. And so the 618 is at 44.32. That is that is at the top of our, resistance zone. So instead of just writing down an arbitrary number like 44.50, because I think I was like, oh, when we get up here, it's going to start to, we're going to see some resistance up here. We should really actually just write down this number, which is 44.32, because 44.20 is yesterday's highs. And I got to, let me go ahead and say this again. Just, you guys might have missed this if you weren't listening in to the daily roundup yesterday. I said yesterday, I think we're going to rally. I don't think we're going to rally to new highs. So I'm going to say that again. I think we rally here, but I think we're actually forging or starting to carve out an actual high in the market. Now, I might be wrong, and maybe it's going to wait till after Jackson Hole. We're going to bust to new highs, but I'm going to go with this area is going to offer pretty stiff resistance going into this next week. And like I said, maybe I'm completely wrong here. Maybe we just blast new highs, but for today, I think we have to just keep in mind this 44.32 level might cap us. Like if we break new highs for the day, it's going to continue to squeeze shorts from yesterday, right? So just let this work out in your head. Okay. It's Friday. Markets close in a few hours. It's right here's yesterday's highs. We're going to squeeze, let's say we squeeze past those highs, trip stops of everybody that got short yesterday, right? And it takes us up another 10 or 15 points. I mean, and then we get into Friday, and then you get I don't know if I really want to chase, I don't want to chase long anymore. You know what I mean? You're going to get that dynamic playing into the market. So, you know what I'm saying? Okay. So, how many of you guys are on, light subscriptions that are listening in right now? You're not on a premium subscription, because I'm gonna show you guys something really quick. How many of you guys are just on light? A couple of you guys are. Okay, I'm gonna just show you, just so you know my exposure right now. A couple of you guys are okay. So if you go to the trades room, I'm in a few positions here, so I'm gonna take you back. Amir jumped in the wrong room today. He's like, he was like, TGIF. He started putting GIFs in there, and he realized he was in the wrong room, because we're all in the general chat room. But the trades room is actually really nice because you can kind of see where people are positioned. So I got stopped out of my I took a long Aussie yen, really small, and I noted that. But I'm long some Aussie New Zealand. I'm long Canadian yen. Okay, and I'm long some pound Aussie. Or I'm sorry, short some pound Aussie. Excuse me. You guys probably saw all the updates that came out, but I'm gonna share with you the reason why I started doing that a couple hours back. The Canadian yen, just want to show you really quick. Yes, we're below the 200-day moving average, but this, this is a big level. And I was talking about it on the FA.C.E webinar, right? This pound Aussie been targeting this 50% retracement ever since we broke above this channel. If you guys read the basic technical analysis, you know this, but when we broke above this channel resistance, I became really bullish above 187, right? And I was targeting this 50% retracement up here at 91.45. We hit it overnight. So as we hit new highs in price, the relative strength was divergent. So I'm now starting to short that. With the Canadian yen, I bought a little bit more, and then I bought some Aussie New Zealand, just so you guys know kind of where I'm thinking. Do I think the dollar is going to pull back here? I do. I actually think the dollar is going to pull back, and that's why I was, drawing out this this euro dollar, descending wedge. Look, a break above 116.90 will turn us bullish intraday. Now, I am bearish, just so you guys know. And let's talk about this, because I know there's been some confusion with John specifically that doesn't understand how I use the bias chart. So I want to make sure I'm being very clear here. The euro bias is bearish. Does that mean you have to be bullish? Or, I mean, you can't trade long? No, if you trade long, fine. Just know that you're going counter trend. So like if I trade counter trend something, okay, and I'm buying, let's say I buy the euro today, which I'm probably not going to do on a Friday. I don't want to be, I'm going to keep my dollar exposure to a minimum right now. But let's say I did. Okay. If I bought the dollar, or bought the euro, and I'm like, oh, broke 116.90, I'm going to get long. If I know that the trend is bearish, I'm just going to be trading in a smaller position. That's it, right? I'm not going to be aggressively long because I know the trend is lower. So that's why the biases are very important, because it helps me identify the positioning I want to take in the market. 116, is it 55 or 65? 55. 57. Well, that's here. I'm just going to put that's key. That's 161% extension. Cable. So I hope the pound bounces. I hope we forge out a lower or a higher low, because like I said, I'm looking for some stability here in currencies. So let's see if we get it. This is going to be key support. 135.70 resistance will be what I think is going to happen. And just because I think it doesn't mean it is going to happen. What I think is going to happen is we're going to rally back to here and look for a pivot back up here. So that'll be 137.15. 137. Let's just call it 137.20. Sorry, I'm trying to move my microphone out of the way. I still will keep it in range. You notice we haven't hit a new low. I mean, this is really more of a range than anything. Support 130. 135.70. Aussie, bearish, obviously, but it looks like we're going to get a little bit of recovery, and we should. I mean, I eventually am going to be targeting the Aussie down here. And as I've explained to you guys on many occasions, I actually am going to trade the Aussie on the long side down here. I want to be long the Aussie. Now, I think it's going to be more of a tactical long, meaning that I'm going, you know, being long the Aussie dollar for me is not going to be, I'm going to get, before I thought, you know, but, you know, if we got down here, I'm going to get long and look for the Aussie for a move up into the 80-cent level. Now we've come down here so aggressively that I'm going to trade it on the long side down here. But, you know, it's probably going to just end up being for a week or two, just a tactical long, if you will. But intraday, you know, we're probably going to end up finding some support around here. So 71 cents, let's just mark that down. Resistance will be 71. That spike high overnight was 80. Well, that wasn't overnight. That was in North America yesterday. It would be an 85. So it's bearish. 71 cents. It's not great resistance. 71.85 is, I mean, it's not great support, and this is not great resistance either. Those are just intraday levels. Kiwi, we're bearish, but I think we'll get a rally back up here. I had orders to sell the Kiwi all day yesterday up here, never got close. So those orders are canceled, but that doesn't mean that I wouldn't short it up there. So 68.80 is resistance. I do think that needs to hold. I believe that the Kiwi is bearish while we're below that. And support, this is going to be pretty key support here. High, high, hello. So that all comes in at 67.85. Okay. And that's pretty critical support, actually. That's like, actually, I think it's 67.90, but anyway, that's all really critical support. That's why I'm going to put the asterisk there, because yeah, we get there and you got to be a little careful. Oh, look at the dollar's continuing to pull back here. Okay. Dollar CAD. So big, one of the reasons why I bought the Canadian yen. One of the reasons why I bought the Canadian yen. And Benedict, are you listening into the webinar right now? You're asking questions in the chat room. I'm not sure if you're actually listening to the webinar, so let me know if you are. I see you typing in the chat room. So are you listening in live? Because I'll address your question, because it will coincide with this. I don't think he's listening in. Anyway, okay. So the reason why I'm long the Canadian yen is this resistance is holding, and I think risk appetite is going to continue to bounce. So could I have shorted the dollar Canadian? I probably could have, but the reason why I think the dollar Canadian is going to be, I want to just stay away from the dollar. Let's just put it that way. I'm looking to stay away more from the dollar, but I'm playing the cross rate by being long the Canadian yen. So resistance is right here, 129.50. It's big. We hit it today. It's going to be big. What? Whoops. Okay. We are bullish, but I do think we're pulling back today. So probably the best way to approach the dollar Canadian at this stage is be long on dips like here. So I know the resistance is right there. I see that. but you got to allow for a little overshoot. So probably down here, 78 or 127.85. So I'm going to write down obviously 128, just general. Okay. I think 128 around here is going to be a really key support for us to hold. And look, if the Canadian gets down there, I think that's the place that you want to be long the loonie. If you're going to, so like if you're looking at the bias chart and you're like, well, but Blake's talking about it pulling back. Yeah, I think it's bullish. So if you're shorting it right now because you think it's a little overbought, which it, arguably is, just take a smaller position. If you're going to short the dollar Canadian, instead of shorting 10 lots, short like 3 or 4. You know what I mean? Instead of being long 10 lot or being short 10 lots when you're trying to go counter trend. Dollar Swiss stuck. I mean, we are literally stuck. 92, 91. Nothing's changed. Dollar Norway, big resistance holding right now. I do think we eventually break out. I really do. I think the US dollar Norwegian krona is going to go a lot higher than where we're at, but I don't necessarily think that that's going to happen today, right? It might, but yeah, we break above 911. This thing's going to go a lot higher. So, and we have to prepare for that. And if it does, 922 is the next stop. So I'll just do it this way. Okay. Support, any dip now back to 897. Any dip back there, down there is 897. Any dip out down there is a long. We'd be pretty fortunate if we got there, in my opinion. Okay. All right. Dollar MEX. So I was very surprised that the dollar Mexican peso squeezed up here with stocks going higher. Like, I thought we were going to stop here this morning because it looked like it was going to be a false breakout, but this must be just end of week order flows. You guys do know, maybe you don't know, but maybe you should know. The dollar Mexican peso is a very much a flow driven currency pair. Like one of the guys that I traded with at Gelos for like the last 2-3 years. He's great. He's a really dear friend of mine. He actually went to University of Arizona out in Tucson. Him and his wife live in New Jersey. He loves Arizona. So, he plans on coming here here in the next, 12 months, him and his wife, they're going to stay at our house and while they vacation around, one of those types of things. Anyway, he is an avid trader of emerging market currencies, really the peso. And he came from, I want to say it's Lehman, but I don't think it was Lehman. I think it was like Morgan Stanley, that he traded out for, a number of years. He's my age as well. We're both, about 50 years old. Anyway, he told me, and then, would send me analysis and still does from time to time. The Mexican peso traders, the guys and gals that run the peso, really is a small group. It's a small group of desk traders globally that really run all the order flow through the peso. It's really a very illiquid float. So when you see a move like this could be really the product of one or two banks just getting squeezed out or reducing position sizes. the reason why I say that is because the dollar Mexican peso sometimes moves, and it moves wildly, and I love it. I mean, as a trading currency, I love it. It's one of my favorite currencies to trade. But whenever, like, I was looking at it earlier and I'm like, oh, we're hitting resistance, and it's, and then as soon as it broke resistance, like this move right here is probably one just big order going through. Like I said, it's very illiquid. So anyway, just little flavor for that. I remember they had a conference like last year or 2 years ago, 2 or 3 years ago. I was like, now I guess because of COVID, it was about 3 years ago. There was a conference with all the Mexican peso traders, like a bunch of them got together, like in Mexico. All these desk traders, they had a big conference, like, because they're, like, imagine that, right? Anyway, any dip down to 2020 should be find support. This will be 2040 because that's pretty much today's highs. So. And guess what? While we're above the 200-day, it is bullish. And the 200-day moving average is now at 2011. So just think about that. Dollar Norway's getting pushed. I knew it was going to come down. It's getting pushed off the ledge here. Boop. Anyway, dollar peso. Oh, we just wrote that down. Dollar yen triangle. You guys should have got that analysis earlier this morning. 110, 109.30. Nothing to do. Dollar index. It's bullish, but we're pulling back. So pullbacks to, as I said on the morning or the FACE webinar, 93.40 is going to be support. And while we're above here, let's do 93.20 because that was a big resistance this week. While we're above those levels, you have to stay bullish. I mean, you have to. We're obviously pulling back intraday. That's fine. Stocks are hitting highs, let it pull back. And we should probably be looking at this. We'll mark up today's highs at 93.75. Okay. Gold, silver, dollar, or gold, silver, Bitcoin. So, hey, guess what? It's the same crap. Is Steve here today? I know Steve, sometimes he's traveling still, so it's like, I don't know if he's going to be here.
He's logged in. I'm not sure if he's going to be here.
Oh, then he will be here. Okay, very good. Hey, how's it going, Stel?
What do you mean?
Oh, there he is. Okay.
Which day haven't I been here?
No, I know, but you're on vacation. You shouldn't be here. That's the whole thing, is you shouldn't be here.
Yeah, I agree with that.
Yeah, I mean, I know you want to be here, but why? You're going to be stuck here for like literally the next 6 months straight. So why not enjoy your time away? Anyway,
it's not that simple.
Sure it is. There's a power button. You just depress it for 10 seconds. If you continue to hold it, it will automatically shut down and close everything. And then that's it. That's how it happens, right? That was easy. Okay. 1770 is going to be support. And then 1760 below that. Silver, hey, guess what? It's 24 bucks. And is key resistance and support is at, oh, we're almost there, 23, right?
We rallied following the RBNZ, hit 105.
And then below that, below 23 would be 22. Hold on. We'll write down the 120. We're going to write down 22 below that, just in case. Just in case. You never know. You never can tell. Oh, I forgot to write down support for S&P. S&P support, by the way, is 43.50.55. Shoot. It's whatever yesterday's low was. Thank God no one got caught being short the stock market yesterday, huh, Steve? Still? Remember we were talking about it? Like, hey, you got to be careful because that false breakdown over here, false breakdown over there.
Yep.
But what that does is that solidifies yesterday's lows, which is 43.52. So that means 43.50 is right now critical support. There you go. Oh, I shouldn't have done that. So support is 43.50, and that is critical support for the bulls. I couldn't believe Bitcoin ripped yesterday. I don't know how it ripped out of nowhere. For why? I don't know. I think it wanted to prove everybody wrong, myself included, that it's not going to come down. 42,500 is support, as we know. And while we're above that, it remains bullish. And then resistance above 48,000 points to 50,000, just above that. So I'm going to write down 48K. Then, 48K, then 50K, which would be the AB equals CD completion, basically, would be right here. So, bias chart is finished. There you go. All done.
I got it. I got it.
Good, good, good. So let's say have a great weekend, guys, from me. Not from Steven Stelios, because they're going to stay here with you. But I am going to check out and go drink a cup of coffee and make my kids breakfast before they go to school. So
You do that, mate.
you guys have a wonderful, wonderful weekend for those of you that are checking out already. And for those of you that are not, I'll see you in the chat room. And then remember, Daily Roundup does not broadcast today. It's a Friday. I'll be doing some interviews with Jim Welsh. This is exciting. Before you guys leave too, I wanted to tell you, guess who we're interviewing next Monday.
I know. Can I say?
Please do.
I know as well.
Don't. Shut up. You don't take that away from Stelios. He said it first.
I interviewed her on Traders Summit.
Yes.
Lynn
And,
Alden.
and who set that up?
I am a massive fan.
Yeah.
Lynn Alden.
Lynn Alden, yeah.
She will be interviewed. I'm going to be interviewing her this time around, but we're interviewing her on Monday. I had asked you guys previously if you have any questions for Lynn. Jason, he wrote in and he said, well, Lynn's bearish the dollar. So is Lynn bearish the dollar against, all currencies or against precious metals, or how do that's his question. But if you have any questions for me to ask her, email me. I'm at bmorrow@forexanalytix.com. So it's my first initial last name. Feel free to email me, and if you guys are in the chat room, just ask me in the chat room because I'll write it down. But I am interviewing her on Monday, so that's exciting. for Stelios.
Yep.
All
That
right.
is
See you
indeed
guys later.
exciting.
Bye, guys.
Thanks,
Bye-bye, mate.
Greg. I have literally nothing to say more than what I said on Face. So we can go straight to questions or whatever you want
Okay.
to do.
Have a great weekend, everybody.
Yeah.
Bye-bye.
I mean, literally, there's been nothing. There's been no real movement in the markets. Cryptos are creeping higher. That's probably about it. So, and stocks creeping higher, obviously, as well. I mean, they do that every day, especially on Fridays. But really, I have nothing to say. Somebody was asking on Facebook when Jackson Hole is. It's 26th or 28th of August, so it's not one day; it's 3 days.
Yes, it's next weekend, actually.
Yes, correct.
Yes, it's a 3-day event, so they have enough time to drink it, you know, and enjoy destroying the world via, you know, horrific monetary policy and its side effects, which is more or less exactly what you mentioned, Stelio. So yeah, you know, boys and girls need some time to enjoy it. Somebody wrote to you, "Hi Stella, are you still long EDF?" Thanks, Elias.
Oh yeah, I am, of course. Where did they write that? I can't see it. Oh, there you go.
In the question,
yeah, Electricité de France. Yes, I am still long. It is green, not by a lot, but I am still. It's one of the few.
Want me to have a look at it?
Yeah, have a look. It's one of the few equities that I actually own. I'm very light on equities.
This one,
I mean,
right?
No, this is Electricité de France or EDF, and then choose the one that trades on Euro.
This one.
Euronext Paris. Second one on the list. There you go.
Okay.
That's the one.
Yeah.
It needs to clear. Yeah, it's a triangle basically. It needs to clear that.
Yeah, this
It's
trend
kind
line
of.
now is.
It's
This
kind
trend
of.
line is arbitrary if we want to take the longer term. If we want to take the shorter term, like this one, right? This can go literally either way because we have the longer term picture. Also, there it is.
I'm personally very cautious with equities. I'm only long this and some mining stocks, but I still have it. It's a little bit in the money, and I'm just watching. I have my stops below.
Yeah, it used to be a lot high. Oh my.
Yeah.
Peaked at like, what was it, 81 and change, right?
Yeah, this was 2008, before the crisis.
Yeah, and bottomed out for the time being at 6, exactly 6. Okay, that was a pretty good depreciation, right? Pretty decent one. That RSI divergence over there seems to have played out, this one. Yeah, this can go either way. Clearly, 10.25 is important. So, you know, being long against 10.25 here, I think it makes sense, but we would need to clear this trend line like more or less 1180 to open up more upside towards the longer term trend line resistance, which is at 13.
Basically, this stock, if you're already long it, I think it's okay to hold to see if this breaks higher.
I agree with you.
But if you don't have a position, it's right in no man's land now.
Yes. If I was long, I wouldn't, I wouldn't like close it or whatever. I would keep a close eye to it. But yeah, it might actually work. I mean, it has at least 50% chance from what I see now. Since we jumped on equities through the EDF. It's worth noting that the S&P did hold the retest of this ascending trend line, which is the trend line support of the ascending wedge, right? So it did hold yesterday. We actually ended up going from, decently negative on the day to positive and leaving behind this hammer. And so far today, I know it's extremely early on the day, but we are so far creating another hammer. We were earlier, negative, and we're currently back to being positive. So was this the sell-off? These 2 days, 2.5 days that brought us back to retest the trend line support? It might have been. That's why since the first day, we were contemplating with getting a decent amount of losses, which ended up positive, right? That day I'm talking about. I made it very clear that for me, the only technical development that would matter and would really, turn me bearish in the short term would be a breakdown from this ascending wedge resistance line support. And I've explained why I consider the S&P to be the global barometer for risk. And it's not just because I think about it this way. It's because globally investors think about it like this. So yeah, I do understand the argument that the Nasdaq had already broken down from this ascending wedge, and the IWM misbehaved in comparison, so on and so forth. But I think there is no big potential for downside as long as the S&P doesn't play ball. And the S&P for the time being hasn't, right? And there is a big chance, having just half a day ahead of us, that the S&P will not break down to close the week, on a breakdown territory, right? There is a very decent chance that it won't. So it remains to be seen if something like that can happen next week. For the time being, as I said, the chances are now against this happening by the end of the day. Not that it's impossible or completely unlikely, but I think the odds are in favor of the bulls, having seen the very nice reversal we had yesterday and another reversal that we had pre-market hours, going from negative to positive already, right? Now, this is the pivot area that the bulls need to hold, and as long as they do, they are clearly in control of this trend, right? So there's nothing much more to say about this. Now, unfortunately, I heard Blake mention it before, and unfortunately, it's one of the highlights I had in mind yesterday, and I completely forgot to mention it. So I know it's post-mortem, but it is worth mentioning that on my drawing, the USD MXN has now broken out, right? Yesterday, I wanted to mention it because the USD MXN was testing this wedge trend line resistance, and it has now cleanly broken through it, right? You know very well that I have not been bullish the USD MXN, quite the opposite. Both me and Gregor have mentioned multiple times how much it has misbehaved, in the sense that even when the dollar was rebounding almost across the board, the past few days, the USD MXN, the past few weeks, on occasion when it did, the USD MXN didn't follow through. But in this case, it has now managed to at least break through this trend line resistance. I know that it's just the first milestone, and it might not say a lot, but it definitely does say something. Now, is it the right play if you want to be long the USD? In my opinion, no, because we can still clearly see the divergence in behavior between USD MXN and, for example, USD NOK, USD CAD. Just look at the magnitude of the move higher, right, from the lows, I mean, in comparison to what we've got in USD MXN, right? It's too little too late in comparison, right? So USD MXN is now trying to do some catching up, but has clearly underperformed some other commodity currencies. Yes, I know it has different characteristics, right? It's a developing country's currency, in contrast to the Norwegian kroner or the Canadian dollar. So yeah, clearly, there are some differences, but still worth mentioning. Now, since conversation brought us to it, I'm still monitoring this appreciation in USD CAD and USD NOK. In my opinion, I remain of the opinion, and I heard Mark say the same, and I really respect Mark. He's a great definition. I heard that, if I heard right, the little I had the time to listen in, Mark still believes that the rebound in the dollar is corrective, which, you know, you've heard me say it multiple times. I'm strongly of that opinion. And he mentioned the same target I have, roughly 95. He said that we might see an extension towards 96. And yeah, I mean, you know, you can never be perfect with corrective moves and, you know, assessing in advance exactly where they're going to end. But yeah, I'm of the same opinion. So, you know, being still bearish the dollar in the medium to long term, I'm monitoring at this moves higher as opportunities, as moves that are going to lead to the opportunity to be short again. And you know me, between USD CAD and USD NOK, I will choose once again being short the USD NOK. So, you know, we seem to be stalling at the previous high as we speak, but I know it's like very short term. I wouldn't be surprised to see an extension towards that area, the 930 area. Confluence of resistances up there. If we make it up there rather soon, the trend line resistance from this channel is going to be there. The 78.6 from the last move lower is there. Horizontal support resistance area can be found there as well. So 930 is an area I definitely like in USD NOK. And I'll be more than happy to perhaps start testing the waters by, I don't know, shorting a quarter, a third of a position, something like that. We'll see when we get there. You know, it's not just about the level, as I've explained in the past, it's also about the manner and the structure of the move getting there. That's going to get me more interested or less interested, right? Depends on, you know, how the situation unfolds. Now,
Steve, by the way,
yes,
check your Skype when you have it a second. I have to go in about a couple of minutes, and I think you will have to as well at some point. So check it and.
Oh, we have a meeting. Yeah, absolutely. Yeah. Sorry.
Okay. No worries.
Yeah, I'm going to join you there. So I'm going to be a little bit faster. So anyhow, I don't have much else to say before I go into questions, guys and girls. Not much has happened. I remind you that crude oil has been pushing lower, but still within the boundaries of this channel. I'm going to start looking for a much deeper correction if and only if we break through this trend line support, right? So keep that in mind. I would definitely not want to be short close to that trend line support, right? Natural gas once again held this horizontal support resistance area roughly at 380. At some point yesterday, we were looking like we would break through it. And I remember we had a question about it. I think it was from Amira. And I said that if we do close below that area, then look towards 340, but we didn't. So there is a chance that we might even find a bottom there, right? That's why I pay much bigger attention to what happens on a daily closing basis than to what happens intraday, right? Because intraday, very frequently, what you get is purely noise, right? And I don't want to be involved with noise because, you know, it costs money to be involved with noise. Here is platinum, here is palladium. Keep in mind, palladium is testing now the trend line support from this descending channel. We break through that, and then we're talking about a much stronger move to the downside. So, you know, pay close attention to it. If we do rebound from here, I think that closer to 2,500 is a nice shorting area, like I mentioned yesterday, right? Mark is asking, hi, Steve, Stel, can you please have a look at LYSCF? Let me see what it is. LYSCF. Yeah, I think we had a look at it. What was it? Yesterday, the day before, whatever else. And I said that it looks bad, right? I was bullish as long as this was unfolding, but we've now fulfilled the minimum expectations, more than the minimum expectations. Actually, we even made it to the 127% extension. Sorry, they're calling me for that meeting. I'm going to join them a little bit later. So I said that the move lower is extremely bearish. It's unfolding in an extremely bearish manner. And we got another gap lower. And not only that, just look at the price action. Price action is very indicative. Not only the gap lower, but the opening price, the gap lower opening price was the highest price of the day. That shows very, very big pressure for the stock, right? I mean, they didn't even manage to make this thing rebound a cent from where it opened, despite opening lower in the day. And then we closed the day almost at the lows of the day. That tells me, this market is very bearish in the short term. So you should be very, very careful, and you should look for further losses. I think we might be at the beginning of a much deeper move lower. So if you are still long, if you're asking me because you're long, you were long, you're still long, in my opinion, you are probably wrong in staying long this thing. Ethereum, Bitcoin, there it is. Recent consolidation. I think it's a bullish consolidation looking at it. Ethereum, same deal. Ethereum never managed to break through the first area of support, which was roughly at 2,900, and they show strength, right? So keep looking higher for the time being. I don't see anything bearish in the short term, right? Nothing bearish in the short term. Now, I do understand that somebody can mention that this can be a head and shoulders in the making, right? But I'm going to challenge you and tell you that, sure, who cares? It might. But unless I see a breakthrough 2,900, which is going to be the neckline in that case, I don't care to analyze, potential scenarios for, whichever technical structure might be or might become. Right. For the time being, you have to treat this as a bullish consolidation until proven otherwise. As simple as that. Can you look at the Euro Kiwi and the Euro Aussie? And I know I've omitted Jatin. I've seen your questions. I'm going to go to them. Can you look at Euro Aussie and Euro Kiwi? Sure, I can have a look at them. Let's see what these crosses are doing. There they are. So Euro Aussie and Euro Kiwi. Nice bullish breakout to the upside of this ascending channel in the case of the Euro Aussie. Rather surprising. I would want to have seen an eventual break lower, but as it seems we're seeing a bigger move to the upside. I think you need to respect this. I mean, we've cleanly broken off this, and should be support from this point on. This trend line resistance should act as support from this point on. Look at the RSI also hitting overbought levels. That's also evidence that this market is strong at the moment. And here's the Euro Kiwi, which first had a little false breakdown, and it's now rebounding higher once again, but far away from breaking higher, as we saw in the case of the Euro Aussie, right? So we clearly see some divergence here. The Euro Kiwi is clearly much weaker than the Euro Aussie, and that has to do with the fact that the Kiwi is stronger than the Aussie. As simple as that. Okay. Still a mixed bag if you look between them, right? Still no clear evidence. Is the Euro Aussie lying? Is the Euro Kiwi lying? I guess we're gonna have to find out soon. Thanks, Steve. Lorraine says, my pleasure, Lorraine. URA, and then I'm going to go to your questions, mate. As I mentioned before, let's say URA. Okay, we had a look at this some time ago. We mentioned that head and shoulders formation as a potential after having broken down from this ascending wedge. And then we started talking about possible scenarios of areas that could act as support. And as you see, we indicated some of them on this chart. Right, we've already sliced through the first, and we're now approaching the second one, which is this horizontal support resistance area at 17. Now, keep in mind that there is the next also area of support, which is this. And why is this an area of support? Simply because this is the beginning of the ascending wedge, and a full retracement of the ascending wedge, technically speaking, is a very, very valid development in case we break through 17. So it's 17, and below that it's 1430. If 17 doesn't hold. Now, trying to be long against this area at 17, is a valid risk-reward trade, right? So you like it very much. You might even want to have an attempt to break, to to be long here, although keep in mind that we just recently broke through the 200 daily moving average, so keep that in mind as well. So I wouldn't be surprised at all if we end up retracing all the way back to 1430. Okay, now having said all that, I have to tell you that I do favor the long side if we're talking about medium to long term, right? So in my opinion, most likely this move that's currently unfolding is a corrective move and not a new trend to the downside. Okay. And now let me go to Jatin's questions, and then I'll have to jump to that meeting. It's a rather important one. So it's ARC, ARKG, and IWO. Okay, let's start from IWO. Here it is. Nothing to mention here, right? What we saw some time ago still applies. In my opinion, probably still a bullish. I'm zooming out so you can see the big picture, right? Just look at the difference between the move higher and the move lower. So in my opinion, most likely still some type of a bullish corrective move, but it's still unfolding, right? So you need to respect that. But we can clearly push all the way down to 270 and still technically no big deal, right? Keep that in mind. Now having to do with ARC. Here is ARC. Still in some kind of a consolidation. This is not an easy market to read. You see why, right? We topped out there's no question about it. And we've since created sequences of consolidations. So not an easy market to trade as we speak. I'm not convinced that we've seen the low yet. I think there might be more downside to come from here for ARC. Okay, so keep that in mind. I would be inclined to look lower for the time being, but the evidence is not strong, right? The technical evidence is not strong yet. So basically, if you want my full honest opinion, I would stay away from trading this, and I would rather trade something else instead, something that looks cleaner. And ARKG, a very similar situation. At least this one forms a much better technical pattern, and it resembles the instrument we saw, the IWO, whatever it was. So there you go, right? That's the pattern. We might see more downside, but I think eventually this is going to get resolved to the upside. But as long as we stay within this formation, you have to remain bearish until we finally confirm that we found the bottom, and then look for a continuation of the bull trend higher. Okay, so X, and that is literally going to be the last one. I really need to jump on that meeting. We had this pullback. I drew this when we broke through this ascending wedge, that we're going to see a correction and then higher again. I said that this correction might extend all the way back to 1560. But it didn't. I mean, it played out exactly like this. The only difference being that the extension of the corrective move lower was, much smaller. And now we've actually produced a higher high, right? Incrementally, intraday, but a higher high nevertheless. I know that we've seen a couple of days of a pullback since. I know that we're seeing some RSI divergence. You can notice it there. Right, but I don't think that's enough for me to be bearish. But on the other hand, would I be buying this? No, I wouldn't. So bottom line, if you're long, let me make it very clear. If you're long, if I was long, I would still hold on to my position. If I had no position, I wouldn't be short or long. Okay, and I wouldn't be buying up here, right? If I had to take a position today, as we speak now, I would rather be short against the high, but I wouldn't like having to be forced to be in a position here, right? You get what I mean. Anyhow, I wish you all a lovely weekend, and I'll see you back on Monday. Bye-bye.